Sold at 560.
785 the first, 785 the second, be sure, 785 the third, final time, sold. The third and final time at £910,000, sold. Well, hello there, everybody. George Walker, Will Clough and Ben Hodge. Current edition of the Allsop Prop Chat. This is going to review the auction and the commercial auction of 3rd of February 2022, our first of the year. A busy day, as we've rather predicted as we left last year with the market outlook. Lots to chat about, and Will's going to summarise the agenda.
I think we'll start with the high-level numbers as an overview, which George will touch on. And then, more importantly, and I think more interestingly, we're really going to dig into who's been buying, some quite notable trends that came out of the auction last week. So I think that between the three of us, we'll discuss
all sorts of different ones, isn't it?
Exactly, a lot of buyers information there. And then on the day that interest rates went up for second time in 3 months, we'll touch on that and its impact in the market and demand particularly, and how that feeds through to rental growth in certain sectors. There'll be the usual litter of examples throughout the podcast, and then
not too many.
Not too many, and then we'll round things up. So, George, what were the high level numbers then from the day?
Okay, so we finished today at 34.7 million sold. That's 92%. That doesn't leave very many on the books. Really strong day with 9 lots, better than 5%. That's really as we finished the year last year. We did the market outlook, and that's still available to have a look through. Actually, when we predicted there was a rise in numbers of buyers in December, and that seems to have projected nicely through with. Ben will touch on it, something like a third of new buyers. It was a busy run up to the auction, interestingly, because Cloughy pointed out, I mean, we keep selling lots from last year. I think the longest dated sale was from July. Was it Restaurant Isha?
Isha, lot 50 from July.
Yeah, so that sold just before the auction, and Alex is doing from September and December. So it was a very solid run, and there was a good buzz. It was a relatively small auction, but all February always is. So it was a really nice setting to have the February sale. So, Ben, let's talk a bit more about those buyers.
It was quite interesting this time. And first of all, before we start, I'd like to just thank all of those buyers from the February sale who also spent some time on the phones with us to provide their feedback and fill out our survey.
You've resurrected the buyers
surveys back. Now, the buyers survey was very interesting this time. It brought up some trends, most notably that 1/3 of our buyers in this auction were new to the auction process. They'd never bought at auction before. So that's a remarkably high amount of new entrants.
And that's people that have exchanged, isn't it?
So they've exchanged.
Probably more actually looking than actually being bought. So
yes, so they actually bid, were successful. And one thing we did notice is they tended to bid on multiple lots.
Yeah, across the catalogue.
Yeah.
Got quite evident.
The buyer survey also picked up on actually ongoing demand. So 97% of the parties that actually bought would like to buy again. So that's a huge amount.
And how many were honest about how much finance they need? Because it's always a hard one to say, isn't it?
It's very hard to say. I mean, anecdotally, a lot of parties actually look to complete in cash. In this instance, 70% were looking to complete in cash. And then after completion, who knows what they'll do. Anecdotally, I know a lot of parties do like to finance because it makes sense. But to get to completion, 70% of parties were intending to rely on cash reserves and not finance. So some quite interesting stats there. I think you'd agree the most interesting is 1/3 of buyers were new.
First time buyers, more often used in the buy-to-let market.
And I think,
Clough, you look at the special sort of sectors, how do we divide them down?
I think if you want to call them special purchasers as a sort of overriding theme, and that probably covers more than one base, people that have a vested interest in acquiring that asset through numerous reasons. And I'll just touch on the adjacent owners, and we could pick out 2 lots from the catalogue. Lot 1 in Wimbledon, which was let on an overriding lease, shop, maisonette, a couple of garages at the back.
Quite a low rent, wasn't it?
Directly opposite Wimbledon Park Tube Station. The rent at 33,000 for the whole thing is not enough.
It never looked like enough.
And that was bought by an adjacent owner on that parade, who clearly is content with what they've got down the road, and thought, I can't not buy this. There was certainly the opportunity to add some value above that because the adjoining buildings had had a mansard done.
And he told me he was 180 grand over his budget by the time
Well,
that
perfect. And that was 2.9%, I think, on an initial.
Yeah.
But actually, if you can drive that rent on and perhaps separately let the shop and the maisonette or reconfigure it somehow, then that yield will move way out. And another one of note, Newton Abbot. This is one I remember inspecting at a guess 7 years ago when it was Marks Spencer's. And now it was one Ben dealt with, actually, wasn't it? Let to the job centre, Secretary of State, trading as a job centre. And that was bought by the adjoining owner on the street, who's an owner-occupier. So it'll be interesting to see if that's for their future development plan or whether it's, again, just buying real estate in the centre of town.
Faith in the retail sector. So we talked about in the market outlook operators and tenants buying, and that also came through in this auction round, didn't it?
It did. We saw some tenants buying. Notably, we had the tenants of Lot 10 in Westheath and Lot 20 Birkenhead, these convenience stores. They bought. Just touching upon Lot 10 in Westheath, this was an interesting one. We had so much demand for this, and we are going to touch upon this again, because you had Tesco's till 2030 with a 5-yearly RPI linked reviews. So you had index linked reviews. It eventually sold for 4.6%, yields, but in capital terms, £1.31 million. And we had 17 bidders fighting for that one. So the 10 came out on top. So we had tenants buying.
And it's not the first time that tenant has bought from us, is it?
Yeah, the tenant's been active. But it's not just tenants, as you said, operators as well. So we had a fast food franchisee purchase property we had in Brighton. It was a vacant shop with upper parts.
Brighton being your area of special knowledge, Ben.
Brighton being home.
You did a lot of viewings, didn't you? Fighting on
I did a lot of viewings there. So the upper parts you couldn't even access. You had to. In the end, there was a external staircase built, but it's a former shop. Now this one absolutely flew and sold for £757,000. So that's £264 a square foot because it's vacant. Let's look it up.
And that's probably half what you pay for a house. Well, you did pay for a house.
Yeah,
on a rent per foot basis.
Yeah, I paid about £550 a square foot for my house just around the corner. So 264 there.
But proof that a special purchaser, potentially an owner-occupier, should always pay more than an investor or a speculator.
And I've got to say, the position of this particular property is fantastic for your fast food operator. It's next to a street called Preston Street, which has got all of the fast food operators. You had KFC adjacent.
And it's one that we sold 3-4 years ago, maybe, that I was dealing with.
Yeah.
So it was a fantastic pitch, and no wonder this special purchaser wanted
and actually sold more vacant this time round than it did with a tenant in it.
It's interesting how we've dug out these bars, small corners, and that's really quite effective use of it. Let us whip on to inflation. Look, it was the story of the day as the new year breaks. Everything's been about inflation. I think we're not economists, but you can see in the press even today, Ernst Young Item Club having conflicting views in the Bank of England in terms of where inflation is going to peak. Bank of England says 7.5%, Ernst Young saying 7%. The point is we don't know. And the other thing is, when's this inflation going to come down? Why does it impact property? Let me just give you a quick example without going into too much depth. If you have an index rent and it's growing at 2% per annum compounded for 5 years, to 2% 5 years, your growth is at 10.4%. If that average for the period is 5%, so 5 years of 5%, your 10.4 becomes 27.6% growth. Now that's a big difference. And we've been talking for some time about buyers chasing index positions. Clough, for your library, and we've had convenience stores.
Chris's nurseries,
which we all thought were over-rented, but the indexation,
roadsides, collar and cap.
So the market is very, very cute on these. And if you compare those two Tesco's, Ben, I mean, the one with indexation was 4.6%, and without indexation as a point different, which is 20% difference in pricing. Yes, there's other variables, of course, but I hope that illustrates why inflation is so important. It doesn't necessarily come down to rental growth. Inflation may not drive rental growth, but
we saw different opportunities within the catalogue where people might see rental growth without that indexation.
Yeah, you were going to talk about the one in March.
Well, there's a couple of boots as well that we can pick out on that, but the one in March, lot 19 from our February auction in March in Cambridgeshire, is a B&M, And they've obviously been a positive story throughout the pandemic. And
as a tenant, yeah.
as a retailer operator. And this one is the retail warehouse sector people that's come back. This one was adjacent to Tesco and on a big site, huge parking, but it actually did see rental growth last year.
So that's March 21.
And it was
about 155.
It went up by £6,000 or £7,000. It's not huge, but it's something. And it shows a positive story there. That was 2030 without break, and the rent's still only £6.30 a foot.
So you can see that's much
and huge competition on that one, 2.7, just over 2.7 million.
Couple of £1 million, freehold, single let, perfect auction lot.
Exactly.
And that was good. Let me just pick up on another one, which is something I love the idea of comparing auction lots sold. And if I take you to a Boots in Colwyn Bay, lot 49, yes, I'm going to bang on about Boots, but not for too long. This building was just short of 9,000 feet. And a 5-year lease with 3-year break to Boots. And we had another building in Alton in Hampshire, which is about 9,000 feet too. It's within 200 square feet. So Boots in Colwyn Bay, the lease was renewed at 20,000. Alton in Hampshire, that was lot 6. It was renewed at 85. Sorry, not 5. Renewed at 85,000. So Colwyn Bay, 20,000, same size building, Alton, Hampshire, 85. And the market again picked up on this, driving the yield on Colwyn Bay to below 5%, so it's 4.9%. And the price at Alton was still respectable, just about 6% for that long lease. But there we are, we're thinking that there isn't much growth in Colwyn Bay. It hasn't been for some time, but at £20,000 for £20,000 a year for 9,000 feet, perhaps the market is suggesting there will be growth in time.
And that's probably a theme we've seen with 75% of what we sell retail. There is the private investor appetite for retail. If the rents have been rebased, give it a chance for growth. If it's already over, the market is thinner. If it's been rebased, people will see there might be a chance for growth. Maybe not immediately, but if it's a sensible number now, that might move on in the future.
That brings a conclusion to the February review. We'd love to hear what you think and why you bought for the first time. Podcasts@allsop.co.uk will get us your views to us. We'd love to hear from you. We'll be back again looking at the March auction, which we're getting ready now. So that's a goodbye from me, George, and goodbye from Will and Ben Hodge. Thank you very much.
See you soon.